Hello, everyone. Welcome to the IST today. We are very happy to have Professor van der Em to present at IST. So Professor van der Em is a associate professor in the Research School of Economics at the ANU. He has published quite extensively on economic history, international business, especially on Indonesian economic history and business history. And today he will talk about a very interesting topic, some history about the Jakarta Stock Exchange. So, Professor, please. I think maybe 45 an hour presentation. We have Q&A.
I'll do my best.
Thank you,
Sarah. Thank you. And here I am for the people at home. Thank you, Sarah, for introducing me as a professor in the Department of Economics in the College of Business and Economics. I'm in the School of Management. And the reason to disclose that is that it relates to the fact that I now do these kind of business history topics. Some 10, 15 years ago, I decided that my contribution to my presence in the School of Management would be business history, because there are very few people here on campus doing business history, which is amazing because the ANU has a vast repository of all kinds of business records, company records that are still patiently waiting to be explored for the purpose of business history research. Now, I'm doing some of that, but my interest, my newfound research interest in business history is spilling over into my research interest in relation to Indonesia. And it's a logical step to take that step because much of my research in economic history of Indonesia has been identifying patterns of economic growth and structural change in the long term in Indonesia. But identifying these patterns is one thing. Trying to explain these patterns is yet another. And one of the important areas of economic history of recent years has been to identify institutions that are important in explaining processes of economic growth and structural change. Yeah, it's a wonderful term, institutions, because it can mean anything. Yeah. But I'm zooming in on some institutions, and the Jakarta Stock Exchange, the first Jakarta Stock Exchange, is one of the institutions that I've chosen to zoom in on. And this presentation is based on a paper which I wrote in the second half of last year when we were all sitting at home. Some of us twiddling our thumbs, but I thought I'm not going to do that. I'm going to use whatever sources I can find online in order to get a better impression of what the purpose, relevance of the first stock exchange in Jakarta was. First stock exchange in the sense that most of us know that the Jakarta Stock Exchange was established in 1977. I hope it's not news for you. Not good. 1977, but actually, it was a continuation of a stock exchange which was still in existence by 1977 and which had a much longer history that very few people know anything about. So, my interest in the Jakarta Stock Exchange. So I researched all that material that I found online in order to help me understand the relevance of this stock exchange a bit more. And in January, I completed a paper. And the presentation that I'm going to introduce you to is based on that paper. It's something that's still in the process of shaping up, so any comments that you have will be most welcome. So as you do with every paper, you try to put it in the context of literature. And the literature that I focused on is the literature that tries to gauge the development of financial markets in in Asian countries. And especially a paper by Niblock in the Asian Pacific Economic Review a few years ago, maybe when Hal was editor, I'm not sure, identified that Asian financial markets were still underdeveloped around about the time of writing, maybe 2010. And several indicators of underdevelopment of financial markets were used in order to substantiate that point, and also to accept Japan, Singapore, and Hong Kong from that very broad sweeping statement. But one of the indicators that was used and is still generally used is that stock exchanges, stock markets, still play a relatively modest role in mobilizing capital for investment. And despite the very significant development of Jakarta Stock Exchange since 1977, that is still the case with Jakarta Stock Exchange today as well. It's a relatively modest stock exchange. In other words, most companies do not list their shares on the Jakarta Stock Exchange. As far as the shares of most companies in Indonesia are traded, they must be traded informally rather than formally through the stock exchange. But of course, the largest Indonesian companies have their shares traded on the stock exchange, sure. So for larger companies, the Jakarta Stock Exchange today plays a significant role. But on the whole, still a modest role compared to Japan, for example, where even the smaller companies are listed on the stock exchange and have their shares and also their bonds traded on the different stock exchanges that exist in Japan. Okay, a modest Jakarta Stock Exchange today, and much of the literature tends to make the assumption that going back in time, it can't be that those stock exchanges were very significant in the past. Implicitly, the assumption is also made in relation to Indonesia Stock Exchange. To a degree, the Jakarta Stock Exchange, or the Indonesian Stock Exchange that it's called nowadays, acknowledges that there was a stock exchange that goes back into a foggy past. The Indonesia Stock Exchange today doesn't quite know its origins. Doesn't quite understand it, but it says, yeah, in the Dutch colonial period, there was something going on as well, but it wasn't very significant. Okay, well, maybe that impression is steeped in the current understanding of that, because if you look at any publications that relate to the stock exchange before 1977, on the whole, they don't have very much to say about that stock exchange and its role and its significance, etc. It's a bit of a mystery. All right, so I like mysteries, and that's what I try to, that encouraged me to continue with this research. There is also some literature in the fields of finance and economics, which have shed light on why stock exchanges, for example, in several Asian countries today, are quite modest affairs. In the field of economics, generally, I'm generalizing significantly here. Generally, the argument is that, yeah, stock exchanges, they evolve as part of the broad process of economic development, general economic development. Okay, well, maybe. And in the field of finance, there is more attention to the operations of stock markets. And the predominant view there is that stock exchanges only become relatively significant in economies when there is good regulation. Government regulation is very important as to how stock exchanges operate. And as if they're tightly regulated and regulations are well enforced, then you see more companies raising their hands and willing to pay the fee to the stock exchange in order to have their shares and bonds traded on the stock exchange. So that's in very broad terms, the impression in the field of finance. Now, something that triggered my something that triggered my interest was also a paper by Les Hanna. You don't know Les Hanna, although he has been here at the ANU several times, on and off over the last 25, 30 years. He's a colleague at the London School of Economics, and he did an overview of the significance of listed companies, or companies with their shares and bonds listed on stock exchanges around the world in 1910, in order to identify where these stock markets were significant and where economies relied on these stock markets to a greater or lesser degree. And it turned out that he found Indonesia is third in Asia. Wow. Behind, I've got already, but certainly behind Japan, maybe behind India as well. And that surprised me because, like I said, our general knowledge of the stock exchange in Indonesia before 1977 is modest affair, not very important. Well, there's Les Hanna finding something completely different. And thinking about it, well, maybe that makes sense because there are various historical accounts of very active and also expanding pre-war stock exchanges across Asia, not just in Japan. For example, Gutzman and some people that he worked with did an intensive study on the Shanghai Stock Exchange. So all that fed into my curiosity. Well, what did Indonesia's stock market before 1977 look like? How significant was it? Is it possible to use a commonly used indicator of significance, market capitalization, in order to identify significance in the past? Right?
So yeah, the first two were probably Shanghai and Tokyo, where they didn't have had a study. Just curious.
No, he didn't identify Shanghai, which is a bit odd. But that is possibly related to the fact that he aggregated stock exchanges by countries. So he was interested in national economies, therefore worked with countries rather than cities that had stock exchanges. Right.
And the measure, just to be clear, we're talking about is stock market capitalization to GDP when you're comparing across countries.
Yes.
Yeah.
Well, that's one of the measures that one can use. Of course, these days, the measures that one can pick and choose are quite extensive. But a catch-all crude indicator is exactly as you mentioned. Market capitalization, meaning the nominal value of shares times the current value of the stock exchange over GDP. That's market capitalization. Okay, another reason to be curious is that work by Thomas Lindblad, a colleague from Leiden University, who is now retired. His last stand in the field of economic history has been the creation of a large database, digitizing inventories of companies, registered companies operating in colonial Indonesia for various benchmark years, and that is readily available online now. So looking at that database, and I did that for some benchmark years, well, there are quite a few joint stock companies registered either in the Netherlands or elsewhere for limited liability status, or in Indonesia, and most of them were actually registered in Indonesia, operating in Indonesia as well. Numbers increased significantly. So 91 in 1983, not that many, but that's because many companies were privately owned that operated in Indonesia. They were not yet incorporated. Company law existed in colonial Indonesia since 1846, I think. 1846. So it was possible to incorporate ventures, if that's what you want to do, for limited liability status. Limited liability basically means that you can only hold the operators of a company accountable to the value that has been authorized, that the company has been authorized for. Yeah? Anything beyond that, well, you can't hold the owners, operators of the company responsible. It's only up to the authorized maximum capital. So limited liability status is important when it comes to investors deciding whether or not to part with their savings and hand it over to operators of companies, managers of companies that are going to invest those savings in order to generate returns, and which are then shared with the original investment. Significant numbers. Well, 1920, nudging towards 3,000 companies. Yeah. And for a less developed country like Colonial Indonesia was, that's a significant number. And as you can see, it's not just Europeans in Asia that were in on the game. Chinese Indonesians, Middle Eastern Indonesians, and even there are various cases of Indonesians setting up registered companies for limited liability status.
Is that what other names?
Yes.
Indonesian.
Well, Indonesians together with European Indonesians. So,
Mostly Europe.
yes, exactly. Yes, yes, by far the majority. But there are people with European names in Indonesia, especially Colonial Indonesia. Even though they were born in Indonesia, they were there for generations. They're associated with Indonesia. They would speak Malay. So, yeah, how to distinguish them. Another question.
Do you have any idea of how many of these subsidiaries, where their major listing would be and they have a secondary
Subsidiaries of a London venture.
Not their major listing, because often the case, the same company will list across a number of stock markets.
Yeah, there were some companies that were listed on different stock exchanges, and the main other stock exchange to list on was the Amsterdam Stock Exchange, but not all did that. And for that matter, of course, companies with headquarters in the UK and some other countries like Japan, they had their subsidiaries. Well, their branches actually rather than subsidiaries in Indonesia, because there was no obligation to establish a subsidiary. That didn't happen until 1950. That was really necessary to start establishing subsidiary companies if your headquarters was overseas. Before that, not really necessary, unless you wanted to.
Pierre, I just want to clarify this number. Is it like all of the listed company or just private owned company? Because when we see this one, like even like 17% have shares, for example, 1920 will have like around 500 firms have shares, like we just now we have like around 700.
Yes, that's right. I'll get to that. I'll get to it. Most of these were private companies. Certainly the companies incorporated in Indonesia, Colonial Indonesia, they were privately owned companies. Their shares were generally closely held because maybe there were 10 shareholders only. So they passed it on to their family members if something happened to them, for example. Yeah. But I'll get to the listings in a moment. Okay. So in 1910, to answer your question, about 350 of them were listed companies. So about 70% had their shares and or their bonds traded in Amsterdam and or in at Jakarta Stock Exchange. And if there were British companies, well, they were also traded they were mainly traded in London, occasionally also in Amsterdam or Jakarta. That percentage increased to decreased slightly to 16% in 1929 and then 20% in 1938, because those are the benchmark years that I used. So most were privately owned companies whose shares and bonds were traded privately. if at all, because shares were also closely held and held within families. But the point is, there were large numbers of companies, and they all produced paper, as in shares and bonds. And this is also a revelation, to me at least, because there's a worldwide trade in bonds and share certificates, which have no value anymore, except for collectors. There are zillions of these collectors in the Netherlands, and also in Indonesia. We still collect that material. Wow. And these are just some examples of well, the paper that people were buying in order to invest in companies. This is an interesting one, Simo Mijnbouw, a mining company, because it already in 1907 did its IPO in Indonesia, and it also listed on the stock exchange in Jakarta, and it was one of the bigger companies listed on the Jakarta Stock Exchange, located, incorporated in Indonesia. I couldn't find many examples of bonds, essentially because bonds tended to be, as soon as, of course, the loan had been paid off, those bond papers, well, they disappeared. But shares generally held some value all the way up until many of these companies were nationalized in 1958 in Indonesia. So shares and bonds, lots of this paper issued, bought, and then traded. So that led to the development of a stock exchange. Initially, many of this paper was traded informally. Yeah? Actually, securities trading goes back to 1840. But many of the securities that were traded were bills of exchange. Gradually, shares in companies were also traded, especially after Indonesia, colonial Indonesia, but Indonesia in general, because the 1846 company law continued all the way until, I think, the 1980s. Only then was it replaced with a version of the company law, which was deficient and then had to be replaced with yet another new version, etc. But for 150 years plus, something like that, the same 1846 law was in place. As soon as that legislation was there, more and more entrepreneurs raised their hand, yes, I would like to register my company. And the big attraction was limited liability, because I will not be personally liable anymore, and my family will not be liable anymore for any debts that the company incurs. It's the company really that you, as a creditor, need to address, not me personally. So that's the attraction of limited liability status. Significant expansion after 1870, when the agricultural sector in Indonesia was opened up to inward private foreign direct investments. Before that, agriculture had been closed. And that the next wave was then many new ventures looking at Indonesia's minerals in the fields of oil, tin, coal, gold, roughly since the 1890s. So more and more companies issuing, selling paper. And that created the so-called curve market, because it's already referring to the informal market for the paper that companies were selling in order to mobilize savings for investment. The curve market gradually became more formal, for one thing, because it was hosted in, well, the Batavia, as I call it, the Jakarta Trading Association building. And I'll show you a picture of that building in a minute. But a lot of the trading was very intransparent. It wasn't very clear what the market prices of all this paper would be, because some companies were doing very well. And they generated the promise of doing even better in the near future. In other words, the value of their paper must have gone up. And it did. There are indications of that. But because there was no, let's say, registered, there was no organized market, yeah, it was anyone's guess as to what the real value of the paper had to be. In order to clarify that issue somewhat, you see the rise of brokers. Brokers were there already. They were dealing in real estate, for example. They were dealing in commodities. They were dealing in bills of exchange as well. They were doing all kinds of things. And they were also dealing in bonds and shares of companies. And some were, to a greater degree, specialized in that than others. And it's certainly the ones that specialized in dealing in company paper. They were not comfortable with the fact that there were many amateurs also involved in the market. So by the 1890s, they started to think, well, we need to have our own club and its own club rules so that we can provide our clients, the people that for whom we buy bonds and shares, and for whom we buy them, and other clients who want to sell their bonds and shares, some clarity as to what the value of their paper is and how that changes from day to day. And a major trigger for that idea was that several owners of mining or would-be mining ventures or mining leases started to spread rumors about miraculous deposits of gold, for example. Yeah? And all of a sudden, the shares started to go up. And of course, they sold their shares. And then the rumors dissipated. And the value of the shares decreased. And there were lots of unhappy investors in the paper that all of a sudden was worth nothing anymore. So these professional traders of company paper, they said, well, we need our own club. And that was created in 1898. So you then see the start of a formal self-regulated stock exchange, in this case by an association of securities traders. That worked reasonably well, but it was clear that they were interested in advancing the interests of the traders of securities, not necessarily the interests of their clients, or for that matter, the companies whose shares and bonds they were trading. So that led the Jakarta Trading Association, Batavia's handelsvereniging, to create a new institution, a more formal stock exchange. And it was that trading association that regulated the stock exchange, and that came together in 1912. So since then, you have a formal predecessor of the Jakarta Stock Exchange that was reinvented in 1977. And self-regulation in the sense that they were looking after the interests of the traders, the buyers, and sellers of paper. Traders as in the makelaar. There we are. Wonderful Indonesian term, makelaar, which is from the Dutch, of course. These traders are called makelaars. And it operated well to the extent that various other stock exchanges were created as well. Formally in Surabaya and Semarang, but you also had informal stock exchanges operating in, for example, Medan. Yeah. And the largest companies that operated in Indonesia would have did incorporate in the Netherlands, did their IPOs, their initial public offerings in the Netherlands, and also listed on the stock exchange in the Netherlands. For obvious reasons, there was a lot more capital sloshing around in the Netherlands, that there was more certainty that Dutch investors would buy the shares to the degree that shares were issued. And the larger companies operating in Indonesia, of course, issued more value in terms of shares than the smaller companies that were incorporated in Indonesia. And their shares were therefore most frequently traded in Amsterdam, but they also became traded in Jakarta. Plus, various companies started to register in Indonesia and also started to place their IPOs in Indonesia itself. There were smaller companies, sure, but there was a market for new issues of shares and bonds. And some of those shares and bonds were only traded in Jakarta, and to a degree, even though companies were registered in Indonesia, were also traded in Amsterdam. Now, all of that continued until 1940. There were limitations on the operations of the Jakarta Stock Exchange. It was closed in 1942. It was reopened in 1952. It took a long time. Then, with government regulation, no longer self-regulation, but government regulation, the Indonesian government insisted that it would regulate the stock exchange. It was then marginalized in 1958. It was not closed. It was moribund. There was hardly anything traded anymore, but it continued to operate. And it basically was re-established, re-regulated in 1977. So, in a nutshell, yeah, that's how the institution evolved. And the first trading in 1912 took place in the building of the Handelstrein te Batavia, along the Cointegration. And most likely you've strolled there, have looked at the old buildings that to a large extent still look as they look like in the 1920s. What was going on in that building? Well, actually, the Jakarta Stock Exchange consisted of just one room in that building. And here is the room in 1930 with a few makelaars that happened to frequent the room when the picture was taken. Not that many, but they were only the ones that on that day, at that moment, had shares to sell or wanted to buy shares. Right? There were many more makelaars. They would come later in the day, at the end of the day, or tomorrow, etc. So there were many more makelaars than just these people. On the whole, though, a different picture from Amsterdam, where you had a large floor where different areas, like on the London Stock Exchange, different types of company paper were traded. Now, having this building is one thing, but what is more important and what really constitutes the institution stock exchange and its function is the things you can't easily identify visibly, although of course you can read up on them. Self-regulation was very important. Self-regulation basically laid down the rules by which stock trading would occur, which bonds were traded, and most importantly, the information that was required from companies that allowed, that volunteered their paper to be traded on the stock exchange. Yeah. So they had to, for one thing, issue annual reports that were then summarized in newspapers. For example, a specialized financial newspaper that was issued by the Association of Securities Traders for investors, and also in all kinds of newspapers across Indonesia. Right? So openness was important in terms of what the plans of a company were for the near future, in terms of how it was performing, what its return on assets. Well, it wasn't called that, but between the company accounts, you can identify what the returns on assets were, providing all kinds of information. And also, in between annual reports, important changes in the performance of a company, it had to be, the stock exchange had to be informed about that. Right. So that created a lot of transparency for would-be investors. Plus, the most important element of transparency was any trade and the price agreed had to be publicly announced. and was announced to investors. It was done on a weekly basis in the price courant with security prices and details of listed companies for investors, which were then summarized, for example, in the Indonesia courant in 1938, but not only in Dutch language newspapers, also, for example, in Indonesian language and Chinese Indonesian newspapers. This is the Informal, the Malay language newspapers of Chinese company. There was also a Chinese version of this. Right. And this is a simple disclosure of information. These are the latest quotes on, in this case, so the Lokomotief, Samara newspaper, quotes on the Jakarta, Amsterdam, Samara, Jakarta and Surabaya exchanges, and similar kind of information for investors reading Malay could be found in Malay language newspapers. Right. So all of this created transparency for the purpose of encouraging people to part with their funds and buy shares if they thought it was a good bet. So the thing to keep in mind here is that we're talking about the stock exchange as a secondary market. There was also a primary market, as in IPOs and additional share issues. They constituted the primary market. But the stock exchange had no role in that process. That was in the hands of public notaries. Public notaries organized, some of them specialized on IPOs in Indonesia, just like they did in the Netherlands. In the secondary market, the sellers were those holding shares after IPOs, and of course shares that were issued by companies at a later stage. And the buyers of those shares and also bonds were, well, people who had spare savings, who wanted to invest in paper that retained its value, that would entitle them to dividends or interest payments in the case of bonds, and most importantly, paper that is liquid, that could be readily sold in the stock exchange. Well, almost readily, of course, because you had to find a makelaar, broker, who would then do the deed for you. And it's very difficult to identify who those buyers were. And because there's no ready listing of buyers, but I have the impression, and there are some indications in newspapers, thanks to Delpha, that substantiate that they are personal investors, so people who came into money and thought maybe that's a good investment, and increasingly institutional investors. Increasingly, many insurance companies were established in colonial Indonesia, and also pension funds, and they were sitting on the contributions of their policy buyers that needed investing, and they turned to the paper of companies. And these were not just Dutch Indonesian residents, they were also Chinese Indonesian residents and Indonesian residents, right? And that tallies with other work that I've done, which identified that there was a growing Indonesian and Chinese Indonesian group of middle income earners. People saving money, thinking that buying the paper of companies could be a good investor. And then they were all dealing through brokers. Many of the ethnic Chinese companies that were established in colonial Indonesia, no, but not all of them, that did not have their shares listed on the stock exchange. In other words, given that some of them were quite sizable, and I wrote a different paper on that, their paper must have been traded informally. So there must have been a section in the informal market that focused on trading the paper of Chinese Indonesian companies. So they were operating informally, and formally you can identify them because they were active on the stock exchange in Jakarta. There were various methods of trading shares and bonds. And of course, the big difference is between informal and formal. Some glimpses of the informal market show up in newspaper advertisements. All of a sudden, a broker is, on behalf of the client, offering shares in a particular company that was not listed on the stock exchange, but somebody wanted to sell those shares, and basically asking people to write in, put a stamp on, and offer money for those shares. Right? That's one way of trading. Sometimes via newspaper advertisement, but you can understand that that's highly intransparent, because yeah, you can write the sum that you think that the shares are worth, but how do you know? Okay, I think I'm running out of time. I'm looking at the chair. 15 minutes. Let's see how far I get, because now I get into the boring stuff, maybe, because I'm getting into the numbers. Much of the paper is based on crunching of numbers. The first basic number that I wanted to have is how many different shares were traded, different categories of shares were traded. And to get a better impression of the volume of trading, I also included the types of bonds that were traded. Bonds of companies, and later, since 1910, also the bonds of local and the central governments in colonial Indonesia. So rather than do that for every year, which would be, I will still be busy doing that, and I will do that until retirement and after. I chose to do just 3 benchmark years. 1910, in order to compare the results with Les Hanger's article, 1929, just before the international crisis hit, and 1938, the last year for which it's possible to do this kind of work, for which newspapers would have sufficient data to do this. And of course, in order to work towards comparing over time the significance of the stock exchange in Jakarta, I was working my way towards estimating market capitalization. Yeah, so to aggregate and compare, I was needing an estimate of market capitalization of company shares. I excluded the bonds there, and that's the aggregate of authorized or approved capital times the annual average stock exchange quote over GDP. So the GDP is missing. All right, so hello.
Can you just do that again? I'm not sure what these numbers are.
Yeah.
Money amounts, they should do something like GDP, or
No.
the number of
These are basic numbers, as in totting up the numbers. The total number of different shares and bonds that were traded in the stock exchange, or that were listed in the stock exchange.
No value.
No value. So in 1910, most shares traded in Jakarta and in Amsterdam were company shares. There were various other company shares, such as share certificates, profit shares without voting rights, and preference shares. Yeah, they were there as well, but to what degree they were traded, I'm not sure. Nevertheless, there was also the other shares that could be traded in principle. Then company bonds, government bonds, that leads to the total number of different categories of 367, compared to the today, what was the number again?
Philippines. Philippines at the moment has like around 400.
Oh, the Philippines, okay.
And it is 700.
In Jakarta, I think something like that.
Yeah.
Yes, that's right. Rising to 648 in 1929, decreasing again after the crisis to 440.
Yeah, but it's including the bonds.
That includes the bonds. Yes, that's right.
And these are companies.
Yeah. No, also government bonds. So company bonds, government bonds, company shares, company other shares.
But could say the top number, 267, that means shares of 267 companies were traded in that year.
No, they were listed
They were listed.
and they could be traded. That doesn't mean that they appeared on the market.
267 different
Yes, yes. Certainly with the 267, although most of them were traded in Amsterdam. Fewer were traded in Jakarta, and some of them were traded in both markets. Right?
The number of companies, it's 267 companies.
Yeah, roughly, although some companies had both ordinary shares and preference shares. And preference shares essentially means that you get your share of the dividends before anyone else gets their shares of the dividends, for example, depending on how the company organized that, or how their lawyer basically organized it.
But the unit of identification is companies in this table.
Underlying this is companies, yes.
That's not necessarily true for bonds, is it? Because one company can issue several different bonds.
That's right.
Smaller preference, several.
Bonds were issued at different moments in time. Some companies issued frequently and redeemed bonds frequently as well. Others less frequently, and redeeming them could take a long time. Yeah. But those companies apparently were happy to pay interest every year. So therefore, I hesitate to equate these totals with companies, because some companies were doubling up in terms of bonds and shares, in terms of types of bonds issued at different stages in time.
I'm just wondering how like a specific company operates into different markets. And I find like 1910s, like for example, like listed in Amsterdam and then listed in Jakarta, and they will have like different codes, like how they ordered. Like,
I'll get to that.
Something like
I'll get to that, because this is a cointegrated market. Right? I'll get to that. But essentially, companies then paid a fee to the Amsterdam Stock Exchange and to the Jakarta Stock Exchange in order to have their shares or bonds traded in those exchanges. So it depended where they thought most of their buyers of bonds and shares were, and where most of the trading would take place. As a service to investors, they would pay the fee in both to both markets. If they thought, well, our customers are only in Indonesia, we only pay the Jakarta Stock Exchange. In other words, if as a migrant worker you went back to the Netherlands after many years of work in Indonesia, and you took whatever shares you had in Indonesian companies with you, you were stuck because you couldn't trade them in the Amsterdam Stock Exchange. So you had to send them back by mail, registered mail, of course, in order to have them sold in Jakarta. Or you would rely on the informal market in the Netherlands, which was a bit tricky because you don't know what the price would be. Okay, but I was working my way towards market capitalization, and most likely you already appreciate how market capitalization is calculated. If that's still a bit of a mystery, I have an example here. So here are the largest companies by market capitalization. And you can see that there's a big difference in terms of per company market capitalization of companies only listed in Jakarta and those that were listed only in Amsterdam or in both markets. And the biggest company was, I already forgot what KNMEP stands for, but it's basically the Royal Dutch Shell, what became the Royal Dutch Shell. In 1910, it still had most of its operations in Indonesia. Therefore, I counted it as a registered company operating in Indonesia. But by 1929, it had many of its operations around the world, also in Australia, for example. And because it's so exceptional in 1929, in terms of its market capitalization, I had to exclude it from further calculations. So approved capital or authorized capital times the price to book ratio, which was the unit in which company shares were generally quoted in, yields market capitalization. And this is for the biggest companies. There were hundreds of much smaller companies, right? But adding up market capitalization for all these smaller companies plus these big companies then allowed me to calculate for the whole population of listed companies total market capitalization, and that's what you see in this table. Total market capitalization, which I could then express as a ratio of GDP, although I must admit that they are my own estimates of GDP, so people who think it's all right, I can point it towards another publication estimating GDP. And as you can see, and I've excluded the Royal Dutch, the company that became Shell, for 1929 to 1938. Now, as you can see, as a ratio of GDP, this number is very close to what my colleague in England found, using a very different methodology. Okay. Well, that gives me some confidence in that number. It increased to 1929, and it increased further to 1938. Now, this is basically an indication of the degree to which listed companies were operating in Indonesia, not necessarily the degree to which the Jakarta Stock Exchange functioned to mobilize savings for investment in listed companies operating in Indonesia. The thing is that I can't separate these two markets because, yeah, some companies, the shares of some companies were traded in both markets. Yeah? I can't say to what degree companies sold their shares through IPOs in Indonesia compared to the Netherlands. For that reason, you have both the Amsterdam and Jakarta Stock Exchange in this table. But a rough estimate, depending on whether trading occurred in proportion to Amsterdam and Jakarta together, only listings in those two, would suggest that the ratio in 1910 for Jakarta only would be 0.08, rising to 0.16. So a lower number. But it does indicate that there was a capital market, a functioning capital market, not perhaps as substantial as this indicates, but it was there. The seeds for the capital market were there. Yeah, how do these numbers compare? Well, there's another study which gives number for Japan. This number is comparable to Japan, but Japan then surged ahead because the stock market functioned very well in Japan for the purpose of mobilizing savings for investment and trading of company paper. Yeah.
Slide that said the securities trade. The securities previously and bonds and shares, not just shares.
Exactly. Yes. Yeah, I recognize the problem. These are just shares. Co-integration of markets. Yeah. So I put the share values of companies listed on both stock exchanges, the annual average values of these shares in a graph, and yeah, lo and behold, they fall on the diagonal line, as you would expect, because by then the telegraph, the telephone even were already functioning. Well, initially the mail, of course, functioned, but yeah, the mail took a couple of weeks at least, a month, to go backwards and forwards. So that could be a time lag there. But by 1910 telegraph, still expensive, could be used for that purpose. And certainly by 1938, even the telephone could serve that purpose because it was reasonably affordable. Well, to you and I, living in 1938, still very expensive. But for communications, it helps to explain why the share prices are on a diagonal. Yes, there are several outliers. That's basically a consequence of the fact that company reporting was mid-year, right? So if for some reason you had a lot more trading in the beginning of the year, and an adverse annual report came out, and as a consequence, later in the year, the value of shares was lower. But if you had trading concentrated in one part of the year, whereas in the other markets, it happened in the second part of the year, you get an imbalance. And by and large, that's the explanation for some of the outliers. Yeah, I really have to hurry up here. So co-integration of markets already established with the previous graph. Now, these days, we are very familiar with stock market indices, and there are zillions of different stock market indices that you can use depending on what kind of stocks you're interested in investing. At the time, those stock market indicators, they were laboriously calculated, and it took a while for the methodology to be developed and for the methodology to be readily applied as well. But the Central Bureau of Statistics in the Netherlands did that kind of work. It used different methodologies over time, but I basically spliced several sub-series together in order to get a continuous series of monthly average stock prices. And the Bureau of Statistics in Jakarta did the same thing for a greater number of companies. And that is what you can see here between 1924 and 1940 on the whole co-movement. Yeah. I extended this chart backwards in time because I'm still working towards getting annual estimates of market capitalization. And I thought it would be a good idea to use these long-term indicator of stock market quotes to interpolate and extrapolate the 3 benchmark years that I have created. Right? And that's what I've done here. So the big red dots are the 3 benchmark years, and then interpolations to fill in the gaps and to get a better impression of what long-term trends are. And for that matter, I included Jakarta Stock Exchange, not since 1977 because it doesn't register, but since the late 1980s. As you can see, the degree of market capitalization, yes, only shares, not bonds. The degree of market capitalization in Jakarta 2020 is somewhat comparable in relative terms, relative to GDP, to, well, here we go, already going back to 1900. In other words, yeah, it looks like the Jakarta Stock Exchange had an important role to play in mobilizing savings for investment purposes, already going back to 1900. Maybe. Yes. Yes, it does. But they were co-listed, dual-listed, especially the big companies. They were dual-listed. They were traded in Indonesia and in the Netherlands. But I don't know the degree to which investors in Indonesia bought those shares when they were offered for initial share offerings, or whether many of the shares, most of the shares were bought in the Netherlands.
I think like the integration in the market is a little bit surprising. And possible scenario that I can think is like once like shares traded in Jakarta, they can only really trade it in like a certain period of time, not really trade it every day. The problem is like, okay, when you buy this one and then you can like sell this one at least in 6 months. So that's the integration between Amsterdam and Jakarta can happen. Otherwise, then I don't think it's possible for them to move like in the same like direction. And the quotation that you stated here is annually average, right? Yeah, so that's the possible scenario that I can think at the moment. Like, okay, probably one share issue, then the buyer will be share or buy in the next 6 months or 1 year.
Actually, no. There was daily, if not early morning, midday, and late in the trading.
Actually, it's all operate like daily, but like the transaction for specific shares, it only can happen like in a certain period of time.
Yes, you're right. As soon as a price is agreed and the quantity of shares that are traded are agreed, then there is a time horizon for the transaction to take place. So if necessary for the physical share certificates to be put in the registered mail, stamp on it, and to be posted either to the Netherlands or to Indonesia, depending on where the investors are. Yes, that's right. That's right. But that doesn't take away from the moment when the transactions occur. Yeah. And it's possible that there is some arbitrage possible because information about companies operating in Indonesia, information in Indonesia about those companies is not readily available in Amsterdam. Yeah. But given the development of the mail service, for one thing, secondly, the telegraph, and then the telephone, maybe the lag became smaller and smaller, certainly when it concerned high value shares. Ross?
With a company that's listed both in Amsterdam and Jakarta, do we know whether that company is only operating in Indonesia or could it be operating in both countries? Because if company X is listed in both places, but it has a whole lot of operations in Holland, then the idea of raising capital for investment in Indonesia is quite suspect.
Well, it would demonstrate the integration of activities.
Sorry?
It would demonstrate the integration of activities. And yes, there are examples of companies that have activities in both countries. Administration, that's the least thing that they would have in the Netherlands. Keeping up with the wishes of buyers of products. So marketing would be another functional aspect of the company located in the Netherlands, not necessarily in Indonesia. However, don't forget, not necessarily in financial terms, but in terms of producing for markets, the Netherlands became increasingly less important. For example, a lot of the primary commodities, oil, for example, they didn't go all the way to the Netherlands for processing and then redistribution around the world. No, they went straight to customers, especially in Singapore, because a lot of Indonesian oil was processed in Singapore already in the colonial era, and that continued. And from Singapore, it went to customers in Australia, maybe, if not Japan.
My point is that if you calculate the ratio of market capitalization to GDP, then GDP that you're looking at is only in Indonesia, but if the company is also operating elsewhere, like in the Netherlands, then you're missing out something.
Yes, I was getting to that. The thing is that, the value added in the Netherlands, as far as we have indications of companies operating in both countries and having different operations related to the same products in both countries, value added was a lot smaller compared to Indonesia. Most of the value added was generated in Indonesia, for example, in mining, but also in many manufacturing companies, certainly in agriculture. Most of the value added was generated in Indonesia. So that's one thing. As far as there was a split in activities between the Netherlands and Indonesia, that really started to happen in the 1950s. Why? Well, as you can see, the paper of companies operating in Indonesia was not highly valued anymore in the 1950s in the Amsterdam Stock Exchange. Right? Inflation went through the roof. The share values of companies only operating in the Netherlands went through the roof as well. Companies operating in Indonesia, nah, not so much, not much happening. And at that stage, in order to face up to the increasing risk that they were facing in Indonesia, they started to diversify their operations. They took what they were really good at to other markets in the world. Trading companies did that, for example, but mining companies did that as well, in order to diversify their operations to minimize the risk that they were facing increasingly in 1950s Indonesia, leading up to the nationalisation. So it's really in the 1950s that you see this more significant issue that you are raising rather than before. Sarah, I already came to an end. I mentioned the most important part of my presentation. So let's continue with the Q&A. Ed.
Okay, so first of all, I have to apologize for the early after this. So I have two questions. One is sort of like this one, right? So the first table you provided on market capitalization included companies such as Colonial, Jakarta, companies in Amsterdam only. So I guess my question is, how do you, presumably there's a lot of companies trading in Amsterdam which don't have anything to do with Indonesia. So how do you choose? Presumably a lot of them have, as Ross was saying, have activities in many locations, perhaps in the Netherlands, perhaps in Indonesia, perhaps elsewhere. So isn't there a big risk that you're sort of really dramatically inflating market capitalization for Indonesia and in this comparison with Japan, for example, or it's really overstating Indonesian market capitalization by really. That's the first question.
Can you hold on to that?
Yeah.
Okay, otherwise I forget. In principle, you're right. Yes. In practice, no, not really. Except for what the company that became Royal Dutch Shell. Right. It had operations in many different parts of the world by 1929. It was no longer only operating in Indonesia as it had been doing in 1910. There are few other examples of companies that were globally so diversified. Many companies were focusing, even though they were incorporated in the Netherlands, they were really focusing on activities in Indonesia. Companies had their administrative offices in the Netherlands, yes, where the board of directors would congregate on frequently in order to have a good look at the reports that the managers in the Netherlands would send them, basically give it the blessings or provide advice as to what should be different. But most of the operations were located in Indonesia. Most of the value added was generated in Indonesia. Right? Like I said, in response to Ross's question, that only started to diversify significantly in the 1950s, as such companies realized that their assets in Indonesia were under threat. And they started to depreciate those assets as quickly as possible. Depreciate as in reduce the book value of those assets as quickly as possible. And they started to diversify into other parts of the world, if not in the Netherlands, in order to generate the income and continue to generate the income that their investors, their shareholders would expect. So no, I'm not too concerned, with the exception at the top there about companies having split activities between the Netherlands and Indonesia, and possibly the rest of the world.
Right. So say that 315 number there. So you individually identify companies.
Yeah. One. Yes.
It's very interesting. Thank you. So the second question was about that. You had that list of the top 10 trade companies.
Yes.
So, I mean, I wonder if you could just tell us a bit more about sort mean, obviously, it's like primarily natural resources. That's the general pattern.
For the bigger companies, yes, they were operating in shipping, for example, because shipping requires a lot of capital to invest in not just ships, but also the infrastructure on in the ports to allow shipping companies to do what they're good at, shipping. Oil required significant investments as well, not only in drilling a big hole and drilling it in the right place, which can take a bit of time, but also in terms of processing, transporting for one thing, from where the hole in the ground is to the port, and processing. For example, the what is it? BPM company, also Colonial. It had its own processing facilities. Initially, that was still possible until, let's say, scale economies. Technological change generated significant scale economies in oil processing that you see an enormous refinery opening up in Singapore, which is still there, even bigger. And many companies decided, well, let's just ship it off to Singapore. So they held on to their capacity in Indonesia, but increasing production increasingly went to Singapore. So the point is that yes, these are big companies, and they are big because they needed investment in assets for transport processing in order to do the business that they were good at. But these are the biggest ones. There are hundreds of much smaller ones that also come into the story, whose paper was also traded on either or both stock exchanges. Can I say more about these companies? Well, interesting case. The Bandung quinine factory, which has closed its doors, I realized, although the building may be spruced up for other purposes. It was a big company in colonial Indonesia and in world markets for quinine. Quinine is obat for obat nyamuk, malaria tablets. Yes. It was only listed in Jakarta. It mobilized investment to expand in Indonesia. Like I said, the Simao Mango Maskapai mining company is an interesting one because it's staunchly stuck to operations in Indonesia only. I have no idea why. It could simply be because the people in charge, the managers, if not the owners, might have been Dutch Indonesians. Well, no, I don't know, but it's intriguing. It intrigued me at least. I'm sure everyone intrigued. Other interesting ones, electricity generation. The last many companies, processing companies in Bandung, and they need electricity increasingly. Electricity generation tends to be capital intensive as well. Therefore, it's one of the bigger companies in Indonesia, although not as big in terms of market capitalization as the oil producing companies, for example. Banking, finance. Interesting company is the Handelsvereniging Amsterdam. It sounds like a trading company, but actually it was a management company. It, on behalf of shareholders in the Netherlands, managed a wide range of sugar factories and plantations. That is to say, they appointed the managers in charge of individual plants and made sure on behalf of shareholders in the Netherlands that these managers were doing the right thing by the shareholders. And it also operated on its own account by buying up sugar factories or plantations. So there's a hub of information, knowledge of agricultural markets, the HVA, and it also traded commodities. So diversified enterprise, not just trading.
Yeah, Pierre, thanks. This is really interesting and original, so well done. First question, main question, a bit like what Ed was saying. But can you tell us what this means for the development of a capitalist class in post-independence Indonesia, in the sense of how many of these these guys in B continued in some form after 1949? Because that would, in a way, link the two stories. The way you've done very nicely statistically, but just add a bit of flesh to it. But that may be too difficult. But just that's the big question in my mind: whether they all disappeared or whether they persisted. Can I ask another quick question? Yeah. So I mean, these are two integrated economies in the colonial era, right? Free movement of capital, free movement of skilled labour, and so on, between the Netherlands and colonial Indonesia. So if you're a well-developed company, why wouldn't you want to go to Amsterdam, where presumably it's a better regulated market, a much deeper market? I'm trying to understand, why would you actually just list in Jakarta when it seems to me all the incentives would be the other way, unless it was just you had barriers to entry, a scale. You had to be a certain size, or you had to navigate the Dutch, legal system. But it seems to me over time that the smart money would migrate to Amsterdam, because that's where the big pool of investors are.
No, not necessarily. It depends on how big a pool you need. I mean, if you're a smaller company, this is the approved capital, 1 million guilders. If you're a smaller company, maybe the pool of funds in Indonesia is big enough for you. It's just a matter of what you present to would-be investors as to whether you can get them to part with their money. Right? The other answer is that there were minimum requirements. The Amsterdam Stock Exchange had a much higher minimum requirement in terms of approved capital than the Jakarta Stock Exchange. And for that reason, as a matter of necessity, many of the smaller companies had to appeal to the Jakarta Stock Exchange to have their shares institutionally traded. The third reason is that many of those companies were very much Indonesian companies, even though they had a Dutch name. Many of them small tea plantations, for example, in the area of Bandung, the Priangan region. They were all quite small, but they saw advantages in having their stocks traded because they had sold enough of them for there to be a significant audience of both buyers and sellers of those shares. But they only knew the regional, the local conditions, and they had their contacts in the business world in Jakarta. Therefore, as a matter of course, they go to Jakarta, not Amsterdam.
So was there a pattern when they got bigger, they might have then moved to Amsterdam?
There are cases of that. That's right. If they were successful, eventually they would say, well, our demand for capital and for capital-related services is such that we're better off in the Netherlands. Yes. Mention a few examples. I don't have them. That requires familiarity with, what is it, some 1,000 companies.
You set up a
but
nice
now
PhD.
I forgot your first question.
You set up a nice PhD dissertation.
Oh yes, let me do a PhD.
Somebody else.
Yes, somebody else could do it, that's right. But now I forgot your first question.
I think others may want to ask a question, but it was really just saying, can this tell us anything about the evolution of capitalist development in post?
Oh yeah, of course. No. Yes, as well. No, in the sense that, for one thing, many of these smaller companies, especially, did not survive the 1940s, the Japanese occupation and the revolution. There was a lot of destruction of especially the smaller companies, so they didn't have assets anymore, and they didn't resume business. Or the board of directors in the Netherlands told them, no, that's it. We're going to do something else, or we're closing up. So companies were delisted then as well. Those that remained, they continued business, but they saw the risks of doing business in Indonesia increase in the 1950s. As far as they could do that, they diversified their activities and increasingly became less dependent on activities in Indonesia. Plus, the remaining companies, 1958, well, most of them, except for at that stage, the British companies and the Japanese companies, they were nationalized.
So some of these were domestically owned, they weren't foreign, were they? Not all of them were foreign.
Not all of them were foreign. For example, the electricity company in Bandung, yeah, that was a locally owned company. Maybe. I don't have a good feel for what was nationalized and what was allowed to continue operations. Many of the smaller companies, no, not these are big companies. Many of the smaller companies reinvented themselves as Indonesian companies during the 1950s. So I know that best from the Chinese Indonesian companies. Many of them also registered themselves for limited liability status. They continued operations in the 1950s. They changed their name. They changed their articles of association in order to accommodate new expectations, let's say, of those that are new regulations of those that are, or new expectations of investors, shareholders. But the bigger ones nationalized, except for the the big shipping company, KPM. Basically, all the KPM ships sailed out of port in 1958, never to be seen in the Indonesian archipelago again. So KPM continued operations as a shipping company, but out of the Netherlands. It was very difficult to nationalize these companies because, well, it's difficult to identify the assets, although some of the financial companies were nationalized and changed into Indonesian enterprises. State-owned. Okay, so how does that lead to private enterprise in Indonesia today? No direct relation, I think. Indirectly, yes, because many of these nationalized enterprises, they didn't have the managers that could operate these companies well. So they relied on people from the military, retired people from the military. They relied on new graduates from universities, and they relied on many ethnic Chinese entrepreneurs who had the acumen, business acumen, to also contribute to the running of state-owned enterprises. So it gave several ethnic Chinese, now very rich, wealthy families, a leg up in business. There may have been small traders in the 1950s, but being mobilized in operations of nationalized larger companies gave them access to a range of new opportunities. Initially as administrators of companies, or contributing to administration of companies on behalf of the people that were put in charge for political reasons, but who didn't have the business acumen. But it gave them opportunities to then, in the 1960s, establish their own ventures. And there are several examples of ethnic Chinese entrepreneurs who, in that way, got their leg up in business.
Well, can I ask two questions? I'm not sure that I understand the second column from the right there. It's the average price against the issue price.
That's right, yes.
So that going back to Hal's point, if you look at that first lot of companies, the increase in the average price is substantial. But if anything, it's actually less than the increase in the D ones. So that the Jakarta listed companies certainly did quite well. I mean, without looking for the figure, there's plenty of evidence that the company was as well off in Jakarta as in Amsterdam.
Yeah, much depends on the strategies of individual companies and their moment of establishment. I mean, if they were established, let's say, in 1880, when the guilder still had a good value compared to later, then their nominal value at a later stage was very low compared to the actual value of their shares. And that could be one reason why this is a high number.
Sure.
Okay.
Just
there are other aspects of company strategy that come into the story. For example, the degree to which they depend on borrowed money or money raised by shareholders versus reinvested earnings. Right? If borrowed money is high, well, maybe it is generating quite a bit of profit, making shareholders happy. If the company decides to part with those high profits and share it with shareholders, and happy shareholders drives up the share price. So there are different elements of strategy plus timing.
My other question was, if you compare the bulk values here with, say, the bulk values of the Melbourne Stock Exchange in similar sorts of periods where you have a similar colonial relationship, of course, many of the same things, like this and so forth. What in broad figures is the value of the Jakarta Exchange versus, say, the Melbourne Exchange?
Yeah, nobody has done that kind of exercise yet for Australia. One of the things is that Australia had very different, quite not different as in strange, but different in terms of location stock exchanges. Melbourne, yes, Sydney, Brisbane, Adelaide, even Perth, they all have their own exchange. Oh, Hobart also had its own exchange. Nobody has totted up numbers for all of that yet, in order to do the kind of analysis that, for example, I've done here, or what you're interested in.
Thinking about the colonial relationship, was Melbourne 100 times bigger than Jakarta, or half the size of Jakarta? Would be an interesting question.
It's so interesting to create all kinds of questions. It takes a PhD study to find the answers. I can't tell you at this stage.
Well, another related question to Campbell's would be, what about Singapore, which had the colonial relationship as well, but had a more developed financial sector, I guess. Someone's written on the Singapore stock market.
I tried to find something, nothing yet.
We're on time, so here for this.
Thank you very much for attending. Thank you for your questions. I'd like to think that this was of interest to you. I will revise my paper. Anyone who's interested in the paper, I did bring some hard copies for you to read in bed tonight.
Has it come out as a working paper somewhere?
Not yet. Not
yet. I'd like to have a look at it.
Okay.
Can you
good.
Send me a PDF?
That's also possible.
You got time for coffee?
All right.